When it comes to the currency market, first of all, there's been a bias for the shilling. We've seen it come into today pretty flat. What's your view on the current shilling level and where fair value stands right now?
I think this what's happened this week. We've seen the shilling weaken somewhat, but basically that's, I think, also in line with what's going on in the globally, where we've seen the dollar strengthening. And I expect it to hold steady going forward. But I think as we move into the next month, we may see it going below the 80 levels, maybe to the levels of 79.50.
Let's take a look at some of the forces at play here, because yes, as you've mentioned, there's international concerns to look at, where we've seen the strengthening of the dollar over the past couple of days, with Eurozone woes front and center of stage. But we've got quite a few forces locally that are influencing things as well. What at this stage is the dominant force?
Of course, we've been seeing the central bank coming in to picking up dollars from the market, but they've not been picking dollars from the market for, I think, the last 2 weeks. They've actually been concentrating on the euro. So for the moment, the dollar shilling, basically, I think it's the global market sort of affecting the local market at the moment.
To what extent does the announcement by the IMF that it has reached a preliminary agreement with Kenya on a $500 million credit facility program come to bear and need to get factored into the equation here? Because some have suggested that now the government will not need to buy dollars. Instead of coming to the market, it will be able to draw from this facility.
That is true. I think we should see the central bank coming in less into the market going forward.
Let's take a look at what all eyes are on later this afternoon. We've got the Central Bank of Kenya expected to announce its rates decision. Consensus seems to be that rates are going to be left unchanged at 6%. Your view?
Yes, the Monetary Policy Committee are meeting today, later on today. And my view is actually that, yes, I do expect the rates, both the CBR rate and the CRR rate, to remain unchanged, because I think they since they changed it to about 6%, they brought it down to 6%, the effects are yet to trickle down into the market. And the CRR may not be touched because we are seeing high levels of liquidity in the market at the moment.
Just how much of an inflationary concern is being factored in at this stage? Because yes, we have seen inflation drop down to 3.09% in October, but there are pressures that persist, and that related to drought, high global commodity prices and a recovering economy.
I think inflation is not playing such a big factor at the moment, because as long as inflation remains below 5%, the MPs, the Monetary Policy Committee, will continue to ignore it when they're setting their policies.
Of course, inflation not a factor, growth neither, where there's lots of optimism about growth targets for this year. That's sitting at 5% for 2010. There is some concern, though, about commercial bank lending within a recovering economy, where banks have been pretty resistant to lowering their interest rates in tandem with the central banks. What's your assessment of the banking situation and the flexibility that they need to now be pursuing a little bit more aggressively in order to stimulate this economy via credit lines moving forward?
I think what we've seen with the decline in fixed income interest rate levels, a lot of banks, we've seen them beginning new programs where they're unsecured lending, increasing their mortgages. So they might have, they're not moving in tandem with, basically the central bank governor has really been pushing banks to lower their rates. They have somewhat lowered their rates, and I think going forward, if we remain in this low interest level regime, we should see lending rates coming down lower.
Very quickly on the bond market front, we've seen Kenya expecting to launch a $500 million Eurobond by the end of the financial year in June. What are you making of that decision right now?
Yes, I think what's happening is, with the ratio between the domestic borrowing and GDP has really risen. So the government of Kenya may be looking to raise money from the European markets. And also with the Kenya's risk level, I mean, we had positive results this week where Kenya's risk level was, we moved up a notch. So yes, maybe in the second half of this financial year or the first half of the coming financial year, we may see them issuing about $500 million. Or they might increase this, going also because of the deficit we're facing, revenue deficit.